Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast on the Emini S P futures market for Wednesday, August the 26th, and we're also going to do our midweek review. Let's look at our news items for today. Today is Wednesday the 26th. We just have a report on core durable goods. Actually, they surpassed the expectations, the forecasted by 1.9 to 2.4, and obviously durable goods from 4.4 to 11.2. So apparently more evidence that the market and the economy as a whole are lining up. In other words, the evidence for the market surge, the market continuing to run to all-time highs, is being supported by the economic recovery that we're having, the V-shaped recovery that we're having. So that's really good news for the market. Remember, today we also have crude inventories at 10:30, and tomorrow we have prelim GDP, unemployment claims, and we have the chair of the Federal Reserve Bank, Jerome Powell, speaking at 9:10. Pending home sales in the beginning of the Jackson Hole Symposium. Now, Jackson Hole Symposium is a symposium that's attended by all the central bankers, some academia, some financial people. It's closed to the public, but they do come out every so often and they get interviewed by the press. So something may leak out of there, but typically, the guy that really shakes the game here is the chairman. So the chairman, if he is interviewed, then obviously he can more or less do something that may trigger some effect on the market. But on Friday, another bunch of reports, including personal spending, Chicago PMI, revised UOM consumer sentiments, is a revision of it, and of course day 2 of the Jackson Hole Symposium. Let's look at our charts here, beginning with our daily chart as we normally do. Daily chart is one of the charts that gives us the most obvious and largest general view of the market. And as you can see, the moment that the market crosses over, the moment that you see price above this line here, which is a 200 SMA, it's always historically that considered a bull market. So this was a big retracement to the area, market held, bounced off, and it continued to the upside. So we're continuing to record highs. I mean, actually, if I know you've been trading for a while, but if you haven't, we are above the all-time highs from before the pandemic. This is where we were before the pandemic at about 33.8650. We're at 34.4875. So effectively for the last week or so, we've been establishing new all-time highs, including yesterday, and it looks like we're trying to do that today. Now, volume has been holding steady. A little over a million is our average. Our ATR continues to shrink, and this is what I'm talking about here from that big old drop. And what does ATR measure? ATR measures the average true range of the market. In other words, if you take each one of these bars from the high to the low, sorry folks, sorry my friends, I apologize. If you take these bars and you measure them from the high to the low, and then you average that by a certain number of bars, that's how you get this value here. Now, what's interesting about that value is that it measures volatility. Now, we're measuring volatility on one end, we're measuring volume in the other. Remember, volatility means movement, volume means participants. So we want a nice combination of at least 1.1 million and an ATR above over 14 to have markets that we can expect to move in a way that they can offer us some really good opportunities. And that's what we've been having the last several days. Although the market's been slow, we still have that summer pattern. If you understand price action, you understand how to anticipate areas, how to anticipate the right pullbacks, and if you have key areas that you understand are high probability hold areas, it makes trading a little bit easier. Let's look a little bit closer at the numbers here. As you can see, this is another time period that I like to use as it's less obviously than the daily, but it's still a tick chart that gives you plenty of information. As you can see, the market's continuing with that pattern of runs, consolidations, runs, consolidations, runs, consolidations. Right now, we do have a double top here. We have a double top at an all-time high. Typically the adage in Wall Street is, we sell double tops. But a lot of these double tops have just been quick retracements and more continuation. So, we got to play it as we see it. We'll see the reaction here. But again, these time frames, the huge time frames, we're day traders. We don't make trading decisions based on these time frames. What we do with these time frames is we glean information and we start to compose our what we call our thesis or our expectations. This is where our hypothesis of market movement, potential market movement, or a probable market movement, and then we plan our day from there. Now, when we look at the market, we look at it three ways. We look at it to the upside, we look at it to the downside, but we also have to make sure that we also take into consideration if the market is moving laterally. And when you're moving laterally, you need a strategy that can help you identify key areas, key patterns, or key structures within these lateral movements that can give you hints on which direction the market is going to be headed in the near future. Now, let's look at our analysis chart. This is the one that's closest to our trade chart, and here we are. This is yesterday's intraday high, yesterday's intraday low. Market obviously established the intraday high late yesterday afternoon, broke clearly through it to the all-time highs. It bounced off again, and here's the double top. This is, remember, we're coming off here. We're coming off here, this particular area here. So you can look at that as one main area. But the key is, this is our third time to this area, and that's very significant. That's extremely significant. We did have a trend line to the upside here. Market clearly breaks through, starts to use it, what we want support as resistance. Now, down here we have our volume profile. Now, one of the interesting things is, if the market breaks below these areas here, into this area here, then, the game field is already set up for us. This would be our resistance area. This would be our support area. This would be our midline here, our point of control of Friday, of the day before. So this is where the market could probably do. And you notice markets tend to oscillate between these two areas. They tend to oscillate. They tend to do this, then they tend to do this, then they tend to do this, and then they tend to do that. Now, that's obviously a scenario that could occur if the market comes below these areas. If the market does not come below these areas, what we're expecting is the market to continue to be held up by this particular trend line here as resistance until and once it either breaks or it finally gets to this area here for the next test. This is going to be, these two areas here are going to be very key for the market today. This support here and this resistance here. A clear break above this, obviously we're expecting more continuation down. Any test of this that fails, we do have clear support levels way below, and that's how we got to play it. Take care. Have a great trading session. Let me know if you have any questions.